Good evening, everybody. This is Andy Pedraza with Special Effects Academy on the start of the week session for week beginning December 2nd of 2018 for the Forex trading room. We are going to follow our usual agenda, take a look at the prior week, our currency strength meter, any fundamental announcements, and this is the first week of the month, so of course we're going to have some doozies. Look at the major pairs, or at least the pairs I follow, any setups you see in progress, and a few parting words. We'll start with the long-term ledger. This was a very flat week across the board, so no trades were closed on the long-term account. We have 4 trades currently open. I think all but one were carrying profit of some level. One of them was carrying a nice chunk of profit, Euro New Zealand, when the market opened. So we'll just continue tracking those. There have been developments, which I'll cover as we advance in the presentation, that should spark some sort of directional movement out of the markets this week, regardless of Brexit happening or not. So we'll take a look at those as well. So in summary, no trades closed on the long-term ledger on the long-term account, so we're in the same place we were last week. But we did open 4 trades, USD JPY long, Kiwi dollar short, Euro CAD short, and Euro New Zealand short. On the short-term account, we only opened 2 trades this week. We were starting to look at a different approach based on the fact that fundamentals are outperforming, I should say, or outdoing any technicals as we head into the last month of the year. So we obviously have a lot of stuff going on, which again I'll cover in a bit. But as for the short-term ledger, a flat week, nothing much changed. We opened 2 trades. One was a winner, one was a loser. A very small amount of deficit, less than $5. So all in all, as flat as you would like it. And just summarizing it yet again, a flat week on the short term as we shifted approach, and a promising look on the long-term account with recent developments, recent since Friday, starting to favor some of our open trades. No trades remained open over the weekend on the short-term account. Let's take a look at our relative strength meter for the week prior and the week right before. So the week ending November 23rd, 2 weeks ago, we can see that volatility was around 1%. It effectively almost doubled for this week that just ended. In particular, the Aussie, which had lost ground the prior week, regained it last week, all except against the Kiwi. The CAD was pretty bottom of the pack. It gave up a lot of ground as well on continuing decline in oil prices primarily. The Swiss was very middle of the pack, won some, lost some. We can see that the Kiwi and the Aussie were the clear winners for the week, just based on the amount of red that you can see at the top on all of these. It's NZD, AUD, in bright red. So everybody lost ground against the Kiwi and the Aussie in general. The pound was another clear loser, just underperformed everybody else. I skipped the Euro. Euro is also technically middle of the pack. It gained ground against the CAD, and the pound lost ground against the others. The Kiwi, clear winner, along with the Aussie, of course, and you can see the bright blue underneath both of these currencies. So both of them staged a recovery from the week before. The dollar gained ground against pretty much everybody except the Australasian currencies. So Kiwi, Aussie, and Yen outperformed the dollar. Silver had a pretty bad week, lost value against every other thing out there, and gold was middle of the pack, won some, lost some. So again, the key takeaway is a lot of fundamentals impacting the market, and of course, volatility did pretty much double in this week that just ended. Fundamental announcements for the week. We start on Monday. There is a Reserve Bank of Australia interest rate decision, their monthly rate statement, and that will be happening at 10:30 p.m. my time, Eastern time. I will be trading that one live, just in case. We'll still have our regular 8 p.m. session, but we'll have an extra fundamental around 10:15 p.m. Eastern time to trade that Australian announcement. Then we go into Wednesday. This is a key one. The Canadian interest rate decision is always a very good opportunity. Not necessarily a big mover every single time, but you got to show up for these because you never know which is going to be the one. So we will be opening up the trading room on Wednesday morning at 9:30 a.m. Eastern time to trade this event that is coming out at 10. And last but certainly not least, of course, Friday, December 7th is the first Friday of the month, which means we're going to have our non-farm payroll out of the U.S., always a key event. They're expecting 205,000 new jobs to be created. That is the target. Prior one was a bit higher at 250,000. So that will be obviously traded live. I'll be opening up the trading room at 8 a.m. Eastern time. And we have the same, or the similar rather, event coming out of Canada, their net change in employment and the unemployment rate at the exact same time. I will be focusing on the USD, so on the non-farm payroll, unless something significantly changes over the week. I won't be trading that Canadian one live because I can only focus on one thing at a time, and I prefer to focus on the one that might provide the bigger move, which is always going to be the US dollar, and just based on trading volume in the market. So that's going to be it for the fundies. We'll be trading 3 of them: Australian interest rate decision, Canadian interest rate decision, and the non-farm payroll out of the US. That will be in the emails and in the calendar for anybody who wants to join us. And with that, we move on to a look at the major pairs. So, and honestly, Miguel, I just didn't look. I didn't have a chance to, and I try not to look at these too early in the week. But what was the gap? It closed at 113.90. What are we looking at right now?
On Euro USD?
Yeah.
It is at 13.29 right now. It gapped at 13.50 at the highest.
Okay, so not a huge gap anyway.
Not a huge gap.
It gapped up by about 30 pips and is now dropping to about 10 pips away from the Friday close. Thank you. Appreciate knowing that. Okay, so let's start with the developments that happened since the market closed. There is a G20 summit happening in Argentina, and there was a sit-down between Trump and the Chinese. And what they've done is pretty much cooled down the rhetoric and the threats regarding the trade war. There were some tariffs that were going to be imposed effective January, going up to 25% on Chinese goods. Trump and the Chinese leadership negotiated or agreed to a moratorium on that, a 90-day moratorium. So there will be no new tariffs hitting the Chinese, and obviously no retaliation from the Chinese in response to that until at least 90 days out. Additional to that, the Chinese already committed to buying a crap load of U.S. goods, which is also going to cool down the rhetoric and everything else. So all in all, positive for the dollar, which is why I was expecting the open to be very favorable towards the dollar. We might have to wait for the London open for that to kick in. But across other pairs, I've already seen some nice dollar moves. So in general, this is very positive for the dollar, bullish for the dollar, and you should be taking that direction for the week, or at least not trading against it unless you have overwhelming reasons to do so based on what the market is actually doing, as opposed to what I'm telling you it should be doing. The market is always right. I'm only right if I agree with the market. So euro dollar, I do expect it to go down as a result. I expect all the dollar pairs to move in a bullish dollar direction. And like I said, I'm paying more attention to the fundamentals as the year winds down, simply because that's what the market is doing. The technicals are taking a backseat right now to all the fundamental stuff that is happening. Pound dollar, a very tricky pair. I would expect the dollar to get stronger against the pound, as it will against all the other currencies based on the news I just gave you. But we also have to be aware of all the Brexit stuff happening, the uncertainty in the UK government. So this is probably not the best pair to trade unless something is giving you a good indication. So expect dollar strength, and if we see pound weakness, this is going to be a key pair. It's going to drop way below that level of support that you see there at the bottom of the screen, but we have to wait for the move to happen. Don't jump in early on this thing. USD JPY, I am already long on the USD JPY, so I'm expecting the yen to continue weakening against the dollar, and thanks to the news I shared, that's a pretty good possibility. I was initially going to trade it up to the prior high around the 114.50, which you can see there on your screens. I may increase that, that target depending on what the market starts doing. So I'm going to be paying a lot of attention the next few hours between now and the London Open to see what the dollar starts doing and what these dollar pairs where we have open trades, what they're going to be doing as the market kicks into gear. For now, I still expect this one to continue going up again on the general dollar bullishness that was evident even before the Chinese agreement, and is probably going to be strengthened even further thanks to that. USD CAD, this one's another tricky pair. In general, I would expect this one to continue heading up on dollar strength, but also the CAD is obviously very closely correlated to oil price. And this week we'll have a key meeting of OPEC leadership, which these days means Iran, Russia, and Saudi Arabia. And they're going to be, in theory, doing something about oil price. I'm going to guess that their approach is going to be to tighten production so that oil price has a bottom and starts going up. So they're going to try to strangle the market in some fashion and see what comes out of that. Obviously, the U.S. is also a key player in those discussions, and the U.S. and Trump would favor oil prices to continue low and even to drop further, since we are a net oil importer at this point. So the lower the price, the better for the U.S. economy, not necessarily for the oil-producing countries, but for us. So the jury's out as to which way that's going to end up being concluded. But I would be careful of this pair until we see some sort of decision coming out of these OPEC meetings to see whether oil prices are going to begin rising or not. I was extremely heavily shorting oil prices until last week. I took all my profit off the table on Friday. So at this point, I really don't care. But I do think that oil prices are about as low as they're going to get. And we should probably start looking at a rise in oil price between now and the end of the first quarter of the year, somewhere in that general neighborhood. So I'm no longer shorting oil. Took my profit very happily off the table, and I'm looking at opportunities to trade it in the opposite direction. This will affect, obviously, the CAD. As oil moves, so does the CAD. So keep that in mind. USD Swiss, I'm not going to linger too much on this one. It is still trading very near its level of resistance there at the top at parity, 1-to-1 against the dollar. Until something makes it start dropping consistently, I'm just going to watch it and wait. Aussie dollar, as I said, the Aussie had a pretty brilliant week, undoing the bad week, the week immediately prior. So we're back at that level of resistance near the 73.25 area. And, well, that's pretty much where it closed on Friday. So all in all, we've seen a nice little bit of a recovery out of the Aussie. We can see that it's definitely bottomed out. It started to attack the previous highs, has yet to consistently break above, well, that level of resistance that you see there. But it's looking as if the Aussie is going to have a decent end of year and will probably try to break towards the 75 which is the next area of resistance on the way up. So I'll be looking for opportunities to trade it in either direction, but again, looking for it to tell me which direction is going to be moving before I do any of that. The Kiwi dollar, of course, is the Australian's little twin sister there. So you can see that the charts look very similar. The Kiwi has actually had a better recovery. It's already broken past several of the prior highs, and that is at a much higher level of resistance, actually support right now, than is the Aussie. So it looks to have a little bit more strength behind that reversal. And at this point, we have to call it a reversal. It's definitely broken out of its trend lines, out of its channels, out of everything, and is making its way up. We'll see this Kiwi strength play out against other pairs and against other currencies like the euro, which is one where we're already short and making a decent amount of profit on a long-term trade, but we'll get to that chart. So for now, this one, I would expect it to, in general, continue heading up. But remember, we do have that dollar strength coming back into the market. So we'll have to be, I would be more inclined to a short of the Kiwi dollar at this point for the short term, for the week to come. But in general, towards the end of the year, this one may head much higher than where it is right now. So jury's out. I do have an open trade on it, so I'll be monitoring that one very carefully. Because this one is probably the most susceptible pair to it going up as opposed to continuing down into dollar strength. So keep an eye on it. I'll keep you guys posted. Aussie Canadian, another breakout pair. This is one where oil prices definitely hurt the CAD the most. We had that moment of strength that the Aussie had in the last 3 weeks or so has combined with the descending oil price to make this pair just shoot up. We've traded it a couple of times successfully too. I wish we caught the bigger move, but we didn't. We can't catch every one of them. But this one likely still has a lot of room towards the top to move. So we may indeed be trading it very shortly, bearing in mind the oil discussions happening this week. So I wait for some definite news to be coming out of those OPEC talks before I jump in headfirst into the Aussie CAD. And of course, I'd like to see sustained Aussie strength at the same time, which will make this pair continue to move faster than all the other equivalent pairs. Euro Swiss, no trade on this one. It's consolidating. It's very near support resistance of the Ichimoku cloud, not giving me the opportunities I'm looking for. So until it breaks out of the channel it's in right now, this one is on the back burner. Euro pound, obviously extremely susceptible to Brexit news on both sides of the currency pair. So Brexit will affect the euro, and Brexit will obviously affect the pound. What does that mean? That this pair could go in either direction very easily. So it's not going to be among my favorites for trades. There's easier ways to make money out there. Let me put it that way. Euro JPY, another broadly consolidating pair. The yen has everything to gain in this pair on any bad news coming out of the Eurozone. So the yen is our safe haven currency for the Europeans, and that will come into play if and when anything happens. The other thing is that the U.S. stock market is doing a very steep correction. Indeed, it may turn out to be a market crash if it starts going much deeper. And if that happens, the yen will suddenly become the safe haven for Americans as well, not for your run-of-the-mill American who doesn't know what a yen is, but for the big money, the banks, the one percenters and all that. They understand that the yen is a safe haven as much as the Europeans in general do. So if the stock market continues to suffer reversals, you can start seeing the yen get stronger, not just because of the Europeans, but because of the Americas as well. So that will also play into this pair. Stronger yen, it will tend to go down. And if the euro starts having issues, it will tend to go down even faster. So for now, I'm not going to be too heavily into the Euro JPY, though I do have orders on it. But I'll be keeping an eye on it, because when we do see a move, if all the factors align, this one is also a pretty good moneymaker. Euro Canadian, weak currency against weak currency, so nothing much there for us. It's consolidating. It's at support resistance. We need to give it time to pick a direction before we start consistently trading it. Another one that I am trading to some degree, but I'm keeping a very close eye on its movements. I'm playing the fundamentals more than I'm playing any technicals on this one. Pound JPY, yet another one with huge potential when we see the poor Brexit scenario play out and the pound starts weakening. Not only will the pound weaken, but that will naturally make the yen strengthen at the same time. So a very, very big profit potential for the end of the year into the first quarter for the pound JPY, but not this minute. Aussie JPY, picture perfect example of a sideways pair that's not giving us much. The Aussie strengthens, it goes up for a bit, Aussie weakens, goes down, yen weakens, strengthens, same thing happens. So they're battling it out, and neither one is winning, as you can see from this pair. It just continues to hang out at that level of support resistance where it's at right now, very close to the 83 yen to Australian dollar. So this one does give good opportunities, however, because there is a wide range in the sideways channel. So trading channel bounces on this one is not the worst thing you can do, but you got to catch it at the right point in time in order to make some bank out of it. Euro New Zealand, and I promised we get to this one. You can see how steep that correction has been on the Euro New Zealand. It finally broke past the bottom level of support and is now essentially in free fall. We've been trading this one down pretty much since the top. I'm going to say we probably picked up about half of that move consistently. And we're in short yet again, as we saw that huge candle on Friday that gave us most of the profit we're carrying on the long-term account right now. When the market opened, it was a bit more than 100 pips. When I checked before this meeting, it was a bit less than 100 pips. So it's around that range. We'll see what the remainder of the week brings us. But in general, the Kiwi is gaining strength. And hopefully it will continue to do so, because we are still shorting it. And I have no intention of closing that one out until this move finally ends or plays out. So I won't be doing the entries and exits as I was before. It's now officially crossed all levels of support, and now I'm trading it for the bigger move, and we'll see how far it can drop. If we do have a poor Brexit scenario that affects the Europeans, this is another one of those pairs that will drop even faster. So a good trade to keep open. And last but not least, our pound Canadian, again, weak currency against weak currencies, been consolidating as a result. We need one of two things to happen, or maybe both at once, for this pair to really start picking up speed. And that is for oil prices to start going up, which will benefit the CAD, and for worse Brexit news to come out, which will weaken the pound, in which case this thing will drop like a rock. If those scenarios don't play out, then I would expect it to continue consolidating until something does happen. So that is the end of the chart. So I'm going to take a brief pause here to take a drink of something. And if anybody has any comments or questions, do feel free to jump in right now.
Andy,
Yes, sir.
any new news concerning the Brexit vote? I haven't seen anything.
No, nothing at all. They're in back and forth discussions in Parliament. So it's not a Brexit vote in general. Of course, it's a vote in their equivalent of Congress. So they're in all these speeches, discussions, insults, back and forth. I don't think they've taken a vote, but the general sentiment is we don't like this Brexit deal. But at the same time, there is no other Brexit deal. And the Brits are very aware that if they reject this one, then there's nothing left on the table. So they have to be wondering if a bad deal is maybe better than no deal, or what exactly is going to happen. We are seeing challenges to Theresa May's leadership across the board, internally from her party, and obviously externally from their rivals, the Labour Party, the equivalent of the Democrats, for those keeping score. So there's that going on as well. But no, there has been no definitive vote. There's just been a lot of rage and angst from both sides that really doesn't bode well. But until the actual vote happens in Parliament, it's not a tradable event. We got to wait to see what happens.
Yeah, so which means this would make the GBP, which would make the GBP, well, we should stay away from it, really, until there's something definitive.
Yes, but what I was saying, and I started adding to it, is while I wouldn't be trading it right now in anticipation, I do have multiple pending orders on the books that if we have a sharp drop, which is what I'm expecting, we get taken in and ride it as far down as we can. So there are pending orders there with trailing stops. So even if it happens when I'm sound asleep, we'll get taken in and get as much profit out of it as we can. I'm not expecting the other thing to play out, that the pound gets stronger. That's not in my book. I could put pending orders in for that one, but honestly, I don't want to be taken in long on the pound unless I see something significant that will make me change my mind.
Yeah, I thought so.
Okay, so continuing our setups in progress for this week, I already mentioned everything about the dollar. It's a de-escalation in the U.S.-China trade war that happened after Friday's market close, and personally, I expect even more USD strength as a result. Obviously, the market will do what the market is going to do, despite whatever I may think, but my bias this week is going to be towards dollar strength. The euro is at a very critical point, obviously vulnerable to Brexit, but more importantly, something else that happened last week is that Deutsche Bank got raided by the authorities based on some money laundering or shoddy accounting or whatever it is. And Deutsche Bank is one of the biggest banks in the Eurozone, and a bank I'm proud to say I've been shorting for the better part of 6 months. So that one's looking good as well. But what's going to happen is that this is going to create some level of uncertainty in their banking sector, which will probably reflect in the euro price as well. The worse the news are, if we see indictments, if we see billion euro penalties or anything like that against Deutsche Bank, you can expect the euro to weaken. And of course, if that doesn't happen, then the euro will remain pretty much where it is. So don't trade this one in advance unless you're already in the trade. We'll manage your trades, but I would be expecting that the euro has more downside at this point in time than any possible or potential upside. So I'm also looking to short the euro, and indeed, it's what I'm doing with the euro New Zealand, is taking advantage of that. The pound pairs, nothing much to add. Brexit. That's not going to change till at least March of next year, which is they drop that date when they have to separate themselves from the European Union. Now, we have heard more and more comments from different sides that the possibility of another Brexit referendum, a real Brexit vote, which everybody in the country voting yet again, may be in the cards. It looks like they've got buyer's remorse and they may force the issue again into a general referendum. They're running out of time for that. You can't make a referendum from one day to the next. These things have to be planned out. The drop dead date for getting out of the EU is in March, as I mentioned. So they've got about 4 months to figure out if they're going to do a new vote, schedule it, do it, and count the votes and all that stuff. So getting close to the wire there. But it is an ever-growing possibility that that will happen. So keep an eye on that. The Aussie pairs, they're at a cusp, as I said, could be going in any direction, but it does look like the Aussie is gaining strength after 11 months of steadily dropping against everybody else. It was a long drop, and if that reverses, we can expect a long, long ride towards the top again, because these things do play out in their channels. So yesterday's loser is going to be today's winner. The Aussie was a loser for almost the entire year. If it's finally bottomed out and starts regaining strength, this is going to be a magnificent opportunity to bank a lot of money. The same thing can be said about the Kiwi. I didn't put the Kiwi on the charts because it's pretty much the same spiel as I'm telling you about the Aussie. So keep an eye on both of them, because once they start consistently going into strength, it's going to give you 1,000 to 2,000 pips of pure bank there that you can play with per pair. The cat pairs, which I did decide to include, of course, as I mentioned, there's key OPEC, oil producing and exporting countries, discussions that are going to be happening this week, and that will of necessity affect the CAD. So it replaced the Kiwi in my chart, because I see a lot more potential from the CAD if we see strengthening of oil's future in the coming week than anything I could say about the Kiwi, besides the fact that the Kiwi and the Aussie move in lockstep. So anything I say about the Aussie probably applies to the Kiwi as well. So that is the end of my review. Final note, it is year end. We're in our last month. Happy December, everybody. We're in the final month of the calendar year, and a lot is going on. A lot. Brexit, the China trade thing, the oil OPEC price thing, and a bunch of other stuff. So you need to be in tune with your fundamentals. I love the technicals. I'm a technical trader primarily. But when stuff like this is happening, you cannot base your decisions solely on the technicals. You need to understand what's going on with your fundamentals, or you're going to get crushed. And last but not least, December usually has huge opportunities. There's a lot of movement the final month of the year up until the final week. Once we hit Christmas into New Year's, market's dead. Take some time off, enjoy everything with your families. But until around the 20th, so the first 3 weeks of the month, you usually have pretty good movement, and you can just double your normal profits or losses. So be careful in those final 3 trading weeks of the year. So that is it for me. Comments or questions, and then I'm going to hand it off to Callum in case he has anything he wants to share with you guys. Okay, I'll take that as a no. Callum, anything?
Can you hear me all right?
I can now.
That makes a nice change. Right, okay. Not an awful lot to add on to that. Just last week we closed one trade minus 0.03%. It was minus 4.2 pips, so we're not too fussed. November finished out plus 5.2%, 5.19%, sorry, with 434.6 pips. So the account to date, bear in mind we started on the 24th of October, is up 5.2% and 581.9 pips. The only thing I was going to add on what I'm sort of looking at for the next couple of weeks is, as you mentioned yourself, CAD and the oil prices. Now, bearing in mind strength-wise, at the moment CAD is getting beaten by all 7 of the major pairs. The last time that happened was in March, and CAD made a very, very good recovery. So I will be keeping an eye out to sell it if it does give good signals, but also beware that it might turn around and gain a bit of strength either this week or next week. That's something I'll be looking out for. Other than that, that's all from me, unless anyone has any questions for me personally. I'll take that as a no then. Back to you, Andres.
I'll take that as a no as well. Thank you very much, Callum. Good results. Always happy to hear that. And on that note, I will bid you a pleasant evening. We'll be back. Callum will be back with you guys at 3 a.m. Eastern Time for the London Open, and I'll probably be there as well. And then I will make sure you guys have a recording of this session as well as the fundamental calendar for our trading sessions for the remainder of the week. Thanks for being here, and I'll talk to you guys soon.